Just joining us to talk about the market. Bill Stone is Chief Investment Strategist for PNC Wealth Management. Kelli Hill is Portfolio Manager at Ashfield Capital Partners. George Antonopoulos is President and Chief Investment Strategist at WallStreetEye.com. George, I'm going to start with you. A lot of people saying that we reached capitulation on Friday of last week. Do you support that view?
I absolutely support that view, Cheryl. At 3:30 p.m. on Friday afternoon last week, the Dow Jones Industrial shot up vertically 800 points, followed through on Monday with a 900-plus point gain. Yes, there's some profit taking now, yes, but we reached that low level on Friday, I believe. Now, I'm not in the business of market timing, but what we do know is that as we hit and retest those lows, that shows that we're building a bottom. So yes, the answer is affirmative.
All right, Kelli Hill, we've been talking about large cap stocks have been the place to go. The large growth cap stocks have been the safer place to play over the last year or two. Are you still sticking with that?
Oh, absolutely. I think that the stage is set for quality large cap growth companies. You want to look for companies that have franchise value, a dividend yield, a free cash flow yield, good, strong balance sheets. These are the companies, as you mentioned earlier, are going to be the ones for the long term, the real opportunity. Many of these companies have been severely discounted with the market activity of late.
Can you give us some names? Do you have any specific names that you could share with us?
Well, we like healthcare, certainly, and more importantly on the healthcare device and services side. Staples looks very attractive to us as well. Certainly some of the larger conglomerates, the food companies, and some of the personal products. We think those will continue to benefit from not only domestic demand, but also global demand as we continue to build a sort of a global middle class. So again, those are areas that we think and feel very comfortable that will provide the consistency of earnings and weather through some of the cyclical downturn that we may see going forward.
Do you own Staples real quick, Kelli?
Yes, we do.
Okay, you guys own Staples.
We do have position.
Okay, let me go over to Bill Stone. Bill, here's the question mark on a lot of investors' minds, is you had this massive sell-off last week, and then all of a sudden we come back almost 1,000 points higher. Now it's back below. Is the sentiment, though, Bill, still the same among investors as it was last week? The baby goes out with the bathwater.
Well, I think you are seeing a little bit of a differentiation where at least over the past 5 days you've seen some of the higher quality names trading better. Now, they're down, most of them, but it's all a relative that you're seeing some differentiation, and we've seen some of the companies that have reported better earnings, like a Coke, a Johnson & Johnson. So you're not just throwing those out now with the rest. Again, they may be down on any given day, but I guess that gives us some hope that at least, the panic selling of Friday, that was, really an outright panic, seems to, for the moment anyway, have passed. I can certainly expect perhaps more forced redemptions, perhaps coming from hedge funds, but at least while we trade in a more calmer manner, you can see quality rising.
Hey, Bill, real quickly, Friday selling, we're only a few hundred points off Friday's low, that panic selling that you talk about. It feels different, though, this time, doesn't it? It feels a little bit more like, hey, this is in response to economic indicators, economic numbers, data that's been released, rather than that panic sell-off.
I think, and I also think, bottoming is a process. I do think one way or another investors get tested, so people like looking to do the big bounce out of Friday. At one point, if you really looked off the low on Friday to the close on Monday, you were up over 19% from that point. Anyone who tried to grab onto that trend along the way, I do think the market always tests, the weak hands, and we still probably have people out there that are a little too leveraged in their investments, whether it be hedge funds, whatever you will, and they'll be tested.
Let me go over to Kathy Boyle for a second, because what Eric brings up is very important. This feels different to a lot of people that we're talking to. This is not the same situation as last week. Even though you've got the massive point drop, which scares people at home, the sentiment is different now.
Well, I think that's really short-term oriented, because we had that big 1,000-point rally, 960 points on Monday. That made everybody feel like, oh, good, the world isn't coming to an end. It's not Chicken Little, and now this will be a process. Plus, all the banks and governments stepped up to the program. They feel like that's okay. They're going to come to our rescue, but I think it's a short-term fix.
Boy, I got to tell you, it feels completely different for me. Sunday afternoon, check that, Sunday afternoon, I was looking at maybe, 1,000, 1,500 Dow points down on Monday until, the Europeans, frankly, got their act together and they said, here, we're going to put $1.8 trillion into the system. And then things changed. At that moment, things did change. You went from a very, very scary bearish scenario to now, you know what? Okay, the economy's still on shaky ground, but the world's not coming to an end.
George, that's a good point, is that it has been about the financials that's been hurting the markets. But Eric makes a great point that with European banks and U.S. banks now being shored up, the financials may not be the issue anymore.
Absolutely, Cheryl. It was called confidence. And when the G7 met in Washington this weekend, that was a great indicator. So Eric's right on the money there, because Monday gave us that relief, like, okay, yes, it's going to be tough moving forward. But after 9/11, we experienced the same type of dramatic, sudden bear market that immediately happened after that. But we're strong, and we made it through that time period. And if you look at that, if you look at the financials, how they behaved in that time period, it was exactly almost identical in percentage terms. And then 5 years later, the market hit all-time highs. The average investor that's out there across America right now today, you need to invest over the next 5 to 10 years in your portfolio. Do not judge the market on its day-to-day gyrations, because that's going to occur every day now for at least through the end of this quarter.
All right. So, well, Kelli, let me ask you, though, are people frozen right now, or are there people that are actually getting a little bit of little gutsy, shall I say, and taking advantage of, they think that the market's down near or close to a bottom?
Oh, I know we have. We've actually added to some existing positions here at these levels. And again, I think one of the most important things to be reminded of is, as you were saying, is investor sentiment. It certainly is a lot different this week than it was last week. You have stability in the financial system, albeit it will take years to work through. But again, I think that you are seeing better investor sentiment, people talking about the opportunities that are available, and refocusing on the long term. So yes, I do believe people are stepping up to the plate, and we have alleviated what I think we saw last week was what was somewhat of a buyer's strike.
I want to give last word to Bill Stone. Bill, we are seeing again record levels with the volatility index, the VIX. Is that something that investors are just going to have to stomach for the next few weeks?
I think it is. I think it's maybe just a sign of the times at the moment. And, typically when you get these kind of huge spikes in volatility, when you go back and look at the numbers, it tends to be better returns and the stock market comes after it. It hasn't panned out yet because we hit new peaks in the volatility indices every time we get a sell-off. But when you really look at history, it tended to be a good precursor of better things to come.
All right, we're going to leave it there. Kelli Hill, Bill Stone, George Antonopoulos, guys, thanks for being with us.